Good morning. This is Daybreak Europe. Yes, it's a Friday morning. You can get that sense from me, obviously. I'm Tom McKenzie in London. These are the stories, then, that set your agenda this Friday. Stocks edging higher in Asia as the US looks for its next trade deal. But the Commerce Secretary warns agreements with Japan and South Korea could take, quote, an enormous amount of time. Tariffs and Germany's economy in focus as Commerzbank reports. We're going to break the numbers and speak to the CEO, Bettina Orlopp, later this hour. Plus, President Trump hails the election of Pope Leo XIV, the first ever American pontiff, calling it a great honor. So the earnings crossing right now from the German lender Commerzbank. The stock is up about 54% year to date. First quarter net income coming in as a solid beat. It's a beat for Commerzbank, 834 million euros. The estimates had been for 722 million euros. First quarter net interest income also a modest beat, 2.07 billion euros. The estimates have been for 2.02 billion. We know the focus from analysts had been on net interest income given the lower interest rates from the ECB. To what extent can NII be sustained for Commerzbank in the quarters ahead? There's also going to be a focus as well on loan losses and provisions given this bank services many SMEs in the Mittelstand of Germany. The tariff impact is in focus, but it's a beat on the top line from Commerzbank, and we're going to be speaking to that bank's CEO, Bettina Orlopp, at 6:40 a.m. UK time. Let's get to the broader markets right now, because investors, of course, are digesting the deal, the agreement, the framework between the UK and the US. But arguably, that is small fry in the lead up to this weekend's conversations between China and the US. That's where the consequences are more material when it comes to this global economy than what we've seen from the US and the UK. European futures pointing high by 0.2% after a little bit of upside yesterday. US futures, meanwhile, pointing to gains of about 0.1%, a little bit more modest. You saw upside of around 0.6 for the S&P by the end of the close and a full 1 percentage point for the Nasdaq 100. Looking to build on that today. Again, it's the trade tailwinds that seem to be propelling these markets at the moment, and expectations that maybe you get a reduction, significant, in tariffs between China and the US, potentially as soon as next week. All those caveats, of course, are maintained around how those conversations go in Switzerland this weekend. The benchmark 10-year at 4.36 right now, just a move of 1 basis point. The pound at 1.32 after that deal. Just a little softer on sterling by 0.1%. Some carve-outs for the auto industry, steel, and potentially the pharmaceutical sector as well being gained by the UK, but those 10% tariffs remain in place. Bitcoin breaking above 100,000 once again on the kind of risk-on sentiment that we're seeing across these markets, up 0.1% so far in the session. Brent also getting a benefit from the trade conversations at $63 a barrel, up certainly right now 0.6%, set potentially for some very modest gains this week for oil. So President Trump pitching his trade framework with the UK as an historic achievement after speaking with UK Prime Minister Keir Starmer by phone yesterday. But the agreement fell short of a full and comprehensive deal.
This is a maxed out deal that we're going to make bigger, and we make it bigger through growth. I think it's going to be something very special for UK and special for the United States.
And Britain's Prime Minister Keir Starmer conceded the pair need to, quote, finish ironing out some of the details.
We've agreed the basis of a historic economic prosperity deal, and that is a deal that will protect British businesses and save thousands of jobs in Britain. Really important, skilled, well-paid jobs.
OK, for more, I'm joined by Bloomberg senior editor Bill Ferries. Bill, how would you characterise this agreement between the US and UK? How material is it, given that tariffs remain higher on the UK from the US side, and yet the UK has reduced its own tariffs on imports from the United States? It seems to be far from balanced, at least on that take.
It's, I think you're right, it's far from balanced, and it's still quite vague, leaving a lot of the harder decisions to come later. I think the big picture here is that we're almost halfway through that 90-day reprieve that President Trump gave on these reciprocal tariffs against most of the world. And this is really the first kind of rough agreement we're seeing so far. There's clearly a lot of pressure on the U.S. side in particular to show that this strategy will pay off, to get countries motivated to make deals. But, it leaves a lot of questions unanswered. There's still there was no reference in this to the digital services tax that the UK has that the U.S. has been quite concerned about for a while. There's some disagreement about the steel and aluminum tariffs and how far they're coming down. It is not a broad trade agreement. It really is an outline of something that can lead to further discussions, and how long those discussions will take, people are saying could be months or even years. So it's not the full trade deal that I think is being marketed, but it does show that the president is willing to reach some kind of an agreement.
Yeah, the political gains seem to be clearer than the economic gains at this point from this agreement. We'll see if the economic gains are more consequential when it comes to the talks between the US and China in Switzerland this weekend. We heard from the US Commerce Secretary Lutnick speaking to Bloomberg ahead of that meeting. Let's take a listen.
Our view is going to be whatever the tariff results on China should be their tariff on their business with them. Now, probably the most interesting country I can tell you that has a huge trade deficit with China and a huge trade surplus with us is the European Union. And no one thinks about that, but a huge amount of the European Union is really a tariff arbitrage from China through the European Union into the American economy.
OK, hearing from the Commerce Secretary there in terms of the EU-China-US relationship on trade. Bill, walk us through what to expect from the conversations in Switzerland this coming weekend.
Well, both sides are clearly feeling a bit of pain here in the relationship, with U.S. tariffs at 145% and Chinese tariffs at 125%. The bilateral trade is essentially shutting down basically across the board. Except for things like maybe personal electronics. So it's really important that these talks are happening at all. We didn't know this was going to be the case until about a week ago. There's a lot of expectations that there's not going to be a big deal coming out of this weekend, but there's hope that maybe the tariffs will drop into the double-digit range. We're hearing about 50, 60% level tariffs. That would be an improvement. It's not going to suddenly result in a lot of trade flow back and forth, but it will show that the two sides can have talks and start to work out the broader parameters of an agreement. The U.S. would love to see some of the restrictions on rare earths eased. They'd love to see a more tighter restrictions on the goods that go into making fentanyl dealt with. But really, the talks themselves are almost the point. I think investors want to see some lowering of tariffs, and they want to see a schedule of future talks. They want to know that this is not a one-off, that things are going to continue in the weeks ahead, and there might be more progress made.
OK, fantastic setup of what to watch this weekend in those talks between US and Chinese officials. Senior editor Bill Ferries. Those conversations, of course, taking place in Switzerland. President Trump then saying investors should buy shares ahead of those conversations, signalling tariffs could fall if discussions go well.
Speaker Johnson and Leader Thune have done an incredible job. I mean, I'll let you know we have to get a vote, but we have a lot of support for that bill. And if that happens on top of all of these trade deals that we're doing, this country will hit a point that you better go out and buy stock now.
OK, there's the stock tip then from the US president, of course, ahead of these talks. Let's bring in our markets watcher, Valerie Teitel, for a gauge on this. Valerie, will markets be responsive to the fact that they're having conversations, or will be responsive to tariffs moving potentially from 145% on the US side to 60 or 50, or do they need to see more than that?
Look, markets were quite jubilant yesterday just on this hope that these weekend talks will lead to de-escalation between the world's two largest economies, China and the U.S., this tit-for-tat trade war. But yesterday with the markets, Tom, the theme was really one of dollar strength. We had the Bloomberg dollar spot index have its best day in over a month, rising some 60 basis points. And those key currencies that have really benefited from dollar weakness of late were really, really hit hard. The yen weakened by over 1.5% 1.5, and the Swiss franc was lower by a percentage point at the end of the session. So dollar strength continues to be something that is read through as these de-escalation moves happen. Keep an eye if this continues in today's session. One thing I do want to note is, yes, we had dollar strength. We also had some pretty substantial Treasury weakness. 10-year yields up some 10 basis points by the end of the session. This really steep slide into the close. This was, again, optimism about risk-on sentiment, but also continued pricing out of Fed cuts. Take a look at this next chart behind me. The Fed pricing for July, that's not their next meeting, but the meeting after that, has really been sliced in half in just the last week. At the beginning of May, we were pricing in 40 basis points for that July decision. Now we've sliced it in half, just 17 basis points priced in for July. We're continuing to push out the expectation for those Fed rate cuts on this trade optimism.
OK, that's really interesting in terms of the repricing around the Fed and expectations being dimmed that the further cuts are going to come through in the magnitude that we may have expected. We're getting some clarity now in terms of the tariff impact on exports out of China into the US markets. The latest data suggesting you've seen a 20% reduction there. This is pretty material, Val. Yeah, pretty material for just another glimpse of how this relationship is strained between the US and China. For April, Chinese exports to the US slumped by 21%, but it was well then made up for a pickup into exports to other Southeast nations and to the EU. You can read through this a few things, but maybe this is some tariff arbitrage going on. People are still wanting to front run the tariffs, but rerouting those goods through Europe and through Southeast Asia. OK, which just touches on what the Commerce Secretary Howard Lutnick was saying, wasn't it, in terms of that soundbite earlier, in terms of the trade flows from China to Europe and then to the US. Bloomberg's Valerie Teitel on the China economic data and the repricing around the Fed and the market reaction to this tariff news. Let's get to the earnings story right now, particularly with a focus on the banking space. Commerzbank reporting better than expected first quarter net income this morning, as I mentioned at the top of the show. Let's bring in Bloomberg's Charlie Wells right now for some more context. How should we interpret the numbers out of Commerzbank? Top line, this is positive for a stock that has performed very well year to date, up around 50%.
Tom, that's right. So this is going to be very welcome news for Commerzbank for two main reasons. And I think one of them is analysts know that this is a bank that was one of the most benefited by interest rate increases compared to its European peers. And the thinking is, as these rates go down, it could then be one of the most harmed, as we see this kind of rate negativity there. But at least so far, it's looking pretty solid on the net interest income front. Now, the other reason, and something that's really been looming in the background, has been this UniCredit bid, of course, right, that we saw last year by Andrea Orcel. And it's become more difficult as the share price for this bank has really gone up on a lot of the positivity around German defense and infrastructure spending. And so a solid report will probably bolster this share price, or at least the narrative that it's on a positive trajectory, which makes that takeover more difficult.
OK, so from the German lending space to what is happening in Italy, my goodness, if you can unpack the cross-holdings between all these different banks and what it means for deal-making, then I'm going to give you 5 stars and a gold crown. Monte dei Paschi, they're going to be reporting. Mediobanca as well. They're looking potentially at the takeover, aren't they? Monte dei Paschi and Mediobanca. And then Banca Generali as well to report. What should we focus on? When it comes to the Italian banking space, there's a lot going on, Charlie.
There's a lot going on, and it's basically an M&A wave. And, no pressure, no drama, but a number of these banks are reporting today. Net interest income could be down for them, but that makes capital allocation even more important, raising the stakes on this M&A wave.
Charlie Wells, thank you very much indeed on the pertinence to focus more on the deal-making, arguably, than some of the numbers that might cross from those Italian banks. And, of course, we'll bring those to you when they cross. Mediobanca expected, in fact, Monte dei Paschi expected in the next 30 minutes or so. Coming up, what does President Trump's UK deal mean for the state of global trade? Does it mean much? We're going to speak to Modupe Adegbembo from Jefferies next. We'll get the view as well on the BOE and that pretty dramatic split on the MPC yesterday. Stay with us. This is Bloomberg.
It's obviously good news. Now, however, the UK is a very open economy. So when we formed our view, it's not just about the UK-US bilateral trade relationship, it's about how all the other relationships with the world come back to the UK, as it were, in terms of the openness of the UK. So I really hope, because I do think this is very good news on the UK-US front, I hope it's the first of, many.
Bank of England Governor, of course, Andrew Bailey, speaking to Bloomberg on the UK-US trade deal after the BOE cut rates, as expected, of course, yesterday. The vote split, though, was not expected, or at least not by most. Joining me now to discuss the wider economic outlook for the UK amid that tariff uncertainty, the trade deal, and, of course, where the BOE goes from here is Modupe Adegbembo, economist at Jefferies. Modupe, good morning. Let's start on the US-UK trade deal. Does it change the Jefferies outlook? Does it change your outlook for the growth of this UK economy in 2025, in 2026? Does it move the needle at all on growth?
So when you look at the agreement as it's been announced so far, I think actually the impact on our growth forecasts is quite limited. And that's because the agreement, compared to what we had before, is quite shallow. It doesn't cover a lot of sectors. And actually, when you compare where tariffs were on April 1st, most UK exporters are facing much higher tariffs. So that's the kind of bottom line. I would say that what we see for growth is that maybe the hit that we were expecting from 25% tariffs on steel and on cars, and 10% tariffs across the board, it's slightly more mitigated. I think where there is potential for a much higher growth outlook is in some of the discussions that President Trump and Prime Minister Starmer were talking about, saying this is a framework and this is a base. If we see more sectors coming into the agreement, if we see more trade liberalization, then yes, I think it could be a significant boost. But at the moment, I think I see it more as damage limitation in terms of the hit to GDP.
OK, that's a really interesting way to frame it. Damage limitation. We look for additional details maybe to flesh this framework out. Does the UK benefit from a reduction in tariffs between the US and China, if that's what we get on the end of these talks this weekend?
I think that's the thing that I'm definitely looking at a lot more. So for the UK-US relationship, of course, this agreement is important, but I agree with the points that kind of Bailey has mentioned, which the UK is a small open economy. And so when we look at financial markets and we look at exchange rates and other kind of financial movers, they're extremely important for the UK economy. And therefore, if we see a kind of thawing of relationship between the US and China, that will be extremely important. I think one of the other things that we've sometimes seen mentioned as well that a lot of European countries are thinking about is if we see closer relationships between the US and China, it also reduces the risk of trade dumping, which I think a lot of them were really, really worried about as potentially being something which would drive inflation a lot lower. But that would also be quite a disruptionary kind of move. Even though it would be positive in terms of the inflation outlook, it would be a disruption to domestic exporters and domestic producers.
Well, we heard from Bailey, and you referenced the Bank of England governor. So they cut rates as expected, but we did have this three-way split. And some economists have come into this meeting thinking we're going to get a smooth glide path lower on rates for the Bank of England, a dovish tilt. We didn't get that clarity. We didn't get that read-through. Why was that, and what does that mean for your projection around cuts going forward?
Yeah, so we definitely didn't get a kind of emphatic support of a real increase in the pace of cuts going forward. And I think what I saw from the Bank of England is maybe two things. I think the first thing is that they didn't see a significant hit from tariffs. I think their focus is actually the fact that the UK economy is primarily service-based. And so the direct impact of some of the tariff uncertainty and the higher tariffs actually was more muted than other people. So they only saw a 0.3 percentage point hit, and I think it was 3 years' time, so over the long term. And for inflation, they saw inflation about 0.2 percentage points lower. So that wasn't significant. I think the other thing that I've noticed is that there is a real fear that as we come up to April inflation numbers, which are due in about 2 weeks' time, those inflation numbers are set to rise to about 3.4%. And it seems like the MPC is really, really worried about whether this increase will trigger another set of second-round effects. And I think they're most likely, they want to see more details, number one, about where that inflation number actually comes out, and second, they'd like to see more details about what happens after that number. So that's, for me, is really important. Yeah. And actually, we have no change to our kind of our expectations of bank rate cuts. We think August is the next time that the BOE will lower rates, and we also think they'll cut again in November. So no change for us because we were quite cautious. We saw the risk of a dovish tilt, but we thought that wasn't our base case, and I think we were right in that sense. But the MPC were definitely a little bit more hawkish than we were anticipating.
OK, that's really interesting. So they're not going to cut again until August, is your view. Then they follow up in November. So we get to rates, what, about 3.7%? Because the markets have been pricing about 3.5% by the end of the year. But you're suggesting they don't get that far.
Yeah, I don't think we get that far unless we see growth deteriorate further, because I think when you look at the UK outlook, what's been quite interesting is that we have, even though growth slowed quite significantly towards the end of last year, actually the momentum from this year, at least in terms of what we've seen so far, suggests that growth will remain robust to a certain extent. And I think that gives the MPC some pass to continue cutting rates only gradually.
What does that mean for the pound, Modupe? Do you have a view on the pound's trajectory in the months and quarters ahead?
So I think it is quite interesting because I think the pound definitely has strengthened a lot in some of the moves we've seen around tariff policy, and especially when you look at the kind of pound sterling, the pound dollar pair, it has done well. So I do think that when you look at what's being priced into markets, it suggests that there may be a little bit further to go. I think the one question I have, at least when I'm looking at sterling and I'm looking at trade-weighted sterling, is I potentially think there's a bit more downside in trade-weighted sterling versus maybe versus sterling and the dollar. Because I think when you're looking at trade-weighted sterling and the euro-sterling relationship, that might be a little bit more challenged. And I think that might be a bit more challenged because we don't know exactly what's going to kind of come out of that EU and US trading trading agreement. And I think if we do see a really positive outcome, that could be really, really positive for the euro area in a way that maybe the UK won't be able to benefit from in the same way. So that's one thing I'm looking at.
OK, Modupe, putting the pieces of the puzzle to us. Can I just reference, there's a 5,000-piece puzzle behind Modupe there, right behind that, and putting together the pieces of the puzzle on the global economy, the UK economy as well, and the trade conversations as we look ahead, of course, to those meetings in Switzerland. Modupe, thank you very much indeed. Adegbembo of Jefferies and the Economist there giving her views, I should say, in terms of how rates adjust. For the BOE, expected the next cut not until August of this year. Coming up, Bill Gates criticises Elon Musk for pushing through steep funding cuts to USAID programs. We're going to have the details next. We will be hearing from Bill Gates. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some of the stories making the news this Friday. Bill Gates has warned about the impact of the USAID funding cuts made by Elon Musk and the Department of Government Efficiency. The chair of the Gates Foundation spoke to Bloomberg's Francine Lacqua.
There's no doubt that the USAID payment cutoffs that Elon drove have resulted in dramatic increase in childhood death. We need to look at how this money represents the moral leadership of the U.S.
And we will bring you more of Francine Lacqua's interview with Bill Gates later this morning. President Trump is said to be pushing lawmakers to raise tax rates on some of the richest Americans as a way to offset other cuts in his signature economic package. Sources say Trump wants a new 39.6% tax bracket for individuals earning at least $2.5 million or couples making $5 million. Trump has called the package his one big, beautiful bill to extend first-term tax cuts. Coming up, we're going to speak to Ilsoe on how venture capitalists are navigating the tariff turmoil, particularly when it comes to tech and AI. That conversation's coming up. Stay with us. This is Bloomberg. Good morning, happy Friday. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Stocks edging higher in Asia as the US looks for its next trade deal. But the Commerce Secretary warns agreements with Japan and South Korea could take, quote, an enormous amount of time. Commerzbank beats. The German lender's first quarter profit unexpectedly rises as it set aside less money for souring loans. We're going to be speaking to the CEO, Bettina Orlopp, later this hour. Plus, Pope Leo XIV gets ready to hold his first mass later today. President Trump calls the election of the first ever North American pontiff a great honour. Let's get to these markets then. The trade tailwinds are there. We've had the US-UK framework, the deal. Now we look ahead, of course, to the conversations of Switzerland between the US and China, and expectations that maybe you see a pretty significant move lower in tariffs if those conversations progress in a constructive way. European futures then looking to gains of 0.3%. FTSE 100 futures here in the UK looking to add 28 points. S&P futures stateside up 0.1%. Nasdaq 100 futures after gaining a full 1 percentage point yesterday, looking to build on that today with gains of around 40 points, pointing higher by 0.2%. Let's flip the board and have a look cross asset as well. The moves in the 10-year, you saw those yesterday. The adjustments, of course, 436 right now on the benchmark 10-year. Yields are actually down just 1 basis point. 132 on the pound. The BOE, a three-way split there. Expectations may be that we get slightly fewer cuts than the markets had priced from this Bank of England. 132 on the pound, a little softer versus the dollar, down 0.2%. Bitcoin breaking back above 100,000, up 0.2 in the session today at 102. And Brent getting a lift as well on the trade sentiment, up 0.5%. Let's get to some breaking lines from TSMC. Of course, they made a foundry and producer of chips, churning them out for the likes of Nvidia, Apple, Qualcomm and others. Currently coming through with sales numbers, year-to-date sales numbers increasing 43.5%. That's year-on-year for year-to-date sales at TSMC. Sales coming in at close to 350 billion Taiwanese dollars. So that is a significant boost in terms of April sales. So the April sales number increasing 48% year-on-year. Sales rising 48% year-on-year in the month of April. That suggests that demand around those AI accelerators remains pretty robust. The linkages are there, of course, between TSMC, the designers of the chips like Nvidia, and, of course, the makers of the lithography machinery that goes into their foundries. So think of ASML, and we will watch that stock at the open, 8 a.m. UK time. Now, investors will be keeping a close eye on US-China talks over the weekend, of course. The US says the UK trade framework, meanwhile, it signed yesterday, could unlock other deals. But how can venture capital investors navigate the continuing trade uncertainty? Joining me now, very pleased to say, is Ilsoe, managing partner at NGB Capital. And you have a number of very sizable names within the portfolio, either in the portfolio now or ex-portfolio. So Xiaomi, you back companies like Xiaomi over in China, major, of course, maker within the smartphone space, and now autos, Deliveroo, the exploration company over in Europe in terms of space tech, Lime as well in terms of mobility. Both, thanks for coming into the studio. Talk to us about how the trade war is impacting your space, impacting the ecosystem, impacting the tech sector. Are there direct links, or are you relatively immune to what is happening?
Yeah, good morning, Tom. I think few businesses are completely immune to what's going on at the moment. We live with uncertainty as investors in technology companies. We have our 20-year anniversary this year. We have been through global financial crisis. We've been through COVID. Now we are in a trade war. Obviously, software companies tend to be less affected by what's going on. We have robotics businesses that can be more affected because they're shipping hardware and components across borders, across nation states. And, of course, they are busy rethinking maybe their supply chain, rethinking maybe some of the markets that they want to go after given what's happening at the moment.
Some of these ruptures are leading to opportunities, whether that's supply chain resilience focus or defence tech. How sustainable do you think those trends are? Are you leaning in to those themes as an investor?
So, in being European, obviously the defence tech is a present thing at the moment. We don't have a particular strategy. We have invested in companies that have also defense companies as customers, so-called dual use. Some of our space tech investments, such as the exploration company Skylo in the US and Zona, all have potential for collaboration with government customers as well. So they are sort of in the dual use category typically. Some robotics companies have the same ability to supply both to government and to commercial customers.
How real is the conversation around trust when it comes to US technology amongst your European startups and your European LPs? Is that a real and sustained conversation, do you think? Is there a trust deficit now when it comes to US tech?
There are a lot of businesses in Europe that are rethinking their data sovereignty, right? There is a demand for moving data onto your own shores, right? So that's clearly what is going on at the moment, right? The European Security Foundation has been shaken, to say the least, and that has driven some of these trends also that we see with some of our companies, and also what we see with our customers of our companies.
Deliveroo was a company that you backed, and of course there was a major acquisition, US DoorDash buying Deliveroo at a massive cut to the valuation from the IPO. What does that tell us about listing in the UK? What does that tell us about the ability to grow and scale businesses here?
I think the big issue in Europe is fragmentation. We have some 50-plus stock exchanges, right? We have different framework for treatment of stock options. We have different corporate structures in each market. And it really doesn't help driving the growth of big companies, because the capital markets are fragmented. In the US, there are 4 stock exchanges, right? So we would love to see more initiatives from the European Union to create this tighter financial union that then can keep companies like Deliveroo growing and keep them also as independent companies and potentially acquiring other companies, because that's what a strong stock market facilitates these companies to do.
What do you see when it comes to the capital markets? I mean, they're essentially frozen for IPOs right now. Do you see a thaw coming up for those capital markets for IPOs? How much of a strain is that on startups as they look to maybe secondaries to release some liquidity and capital?
Yeah, smart startup founders will always look for the best timing to go out, and we believe that the second half of 25 and 26 could be the time where things settle down a little bit. The uncertainty at the moment, of course, rattles many people, and we believe sort of in the second half of this year and 26 would be the years where some of these larger companies could start going out.
OK, Bo, thank you very much indeed for coming into the studio bright and early. There's a lot of news to get through today, so we're getting less time with you than we would have hoped, but it's been really fascinating, and I think pretty comprehensive in terms of how we think about how the VC world in Europe is adjusting to some of these trade tensions and where some of the opportunities are as well. Bo Ilsoe, thank you, managing partner at NGP Capital. Coming up, we're going to get back to the earnings story with Commerzbank reporting a first quarter beat on net income. Decent set of numbers for the CEO, Bettina Orlopp. To what extent does that slay the takeover bid from UniCredit? We'll have that conversation in the next couple of minutes. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's get to a major earnings story right now, because Commerzbank's first quarter profit unexpectedly rose as the German lender set aside less money than expected for souring loans amid the trade war. I'm joined now by Bettina Orlopp, CEO of Commerzbank. The stock is up more than 50% year to date. Bettina, congratulations on these earnings. How confident are you that this story can continue in the quarters ahead, given the trade war impacts?
Good morning, Tom. Yeah, I mean, we are very satisfied with the set of numbers. As you said, it's a record quarter. We have achieved a net income of more than 800 million, beating expectations in many dimensions, and that gives us a lot of comfort for the coming quarters. We also progress very nicely with our strategy momentum, and that leads to an absolute go for the outlook. So we confirm our guidance with respect to 2025, and that despite all the turbulences we currently see.
Yeah, so net interest income came in higher than expected. Loan loss provisions were lower than expected. On those loan loss provisions, how confident are you that your projections through the year will be able to hold up given the trade war tensions? What are you seeing from your clients? You service those Mittelstand companies, of course, that are so consequential to the German economy. How much pain are you seeing there? Do loan loss provisions tick up towards the end of the year?
Well, I mean, we forecast an elevated level of risk result for this year. The 850 is more than you would expect, but we also have a very well-diversified, well-managed loan portfolio, and that now pays off. what we see is an increase in defaults, and that is not a surprise because we now have an economy which is in the third year of no growth, and that leaves traces. And that's what we also see. But one has to say that the resilience of German corporates, specifically also of the Mittelstand, is very high. So what we see is really single cases across sectors, but everything seems to be well managed also from our corporate side, and therefore we confirm our guidance. Despite the tariffs, will clearly have an impact on German economies. This is also why we adjusted our GDP assumption from 0.2% growth, which is also very limited growth, to basically zero. And only next year we expect a positive stimulus by the financial package of the new German government.
What are you seeing on corporate restructurings then? You're saying some relative resilience. Are you seeing a pickup in corporate restructurings? And if we don't get a deal between Europe and the US, does that start to become a more prominent and salient issue? If we can't settle a deal, it will definitely put more pressure on the corporates. In the moment, as I said, we have seen a constant increase of the default rates already over the past quarters. And that was also expected because we always said that this very low number, which we saw coming out of the pandemic, also because of all the government support measures, was not the normal number you would expect. And now it has entered the normalized levels, which we also knew before the pandemic. And that is something which will continue, and it will only change to a positive when we really see the financial package paying off, a positive sentiment, growth in Germany, and hopefully also a solution for Europe on the tariff situation. But for the time being, sorry. Yeah, Bettina, I was just going to ask how well positioned Commerzbank is to take advantage of that almost potentially €1 trillion package when it comes to infrastructure and defence. How much of a catalyst, how much of a driver of the business will that be going forward?
Well, it will definitely have a very positive impact on German economy. This is why we also improved our guidance for next year with respect to GDP. And given that we are financing, for example, 30% of German Mittelstand, it will also have a positive impact on Commerzbank, that's for sure. So therefore, and it's the industry, infrastructure and defense is a very important industry for us. It has been also in the past. We have very strong, good relationships to the defense manufacturer, but also to their suppliers and also to the conglomerates. And therefore, we think that it will be a good stimulus, not only for the German economy, but also for Commerzbank.
The new Chancellor, of course, has been sworn in, Friedrich Merz. Have you had a conversation with the new Chancellor? What should his priority be right now, his top and primary goal?
Well, I think he knows very well what his top priorities should be. So I think we should let the government settle in. And then I think the most important thing now is really quick action, specifically with the necessary reforms. Our corporates need a decrease in bureaucracy. We need stability with respect to the energy costs. We need changes on the labor market. And I think the new government is very well aware of it if you read through the coalition treaty. And I think we should give them the time to now implement, and hopefully they will have also a very powerful, let me say, 100-day program. And then we will see over the summer how this works.
And of course, the Chancellor has that deep background in the world of finance as well. So we'll see to what extent he draws on that experience. Do you expect Chancellor Merz to support and back you, the team at Commerzbank, as former Chancellor Scholz did in terms of that fight against UniCredit?
Well, I mean, we have seen comments from all different parties in the past months. Clearly, there have been very clear statements from the previous government. In the new government, there are also previous government parts included. So we clearly expect a messaging at a certain point in time. But I think it's now probably also not on top of their priority list in the moment. So we do what we can do best. We focus on ourselves and on the implementation of our strategy and the delivery, as we have done in Q1.
Well, Bettina, given that delivery and the success you've had so far, year to date, again, with the stock gains and the changes that you're making, the return of cash to shareholders, does the UniCredit bid, is it dead in the water now? Does this slay that bid from UniCredit, particularly as they're tied up with other deals?
I think that is a question probably for UniCredit management. What we do is we really focus on our standalone strategy because we believe that creating value for our shareholders is the best thing we can do. And that's what we have in our hands. And if there's something else coming on the table, we will compare it. But clearly, it needs to be compared to a very solid set of results, a very solid share price with respect also to market capitalization. And we intend to continue the story and make the standalone strategy as most valuable as possible.
It's fair to say it makes it more difficult, doesn't it, for Mr. Orchel?
Well, I mean, an increasing share price and a company which is standalone, very profitable, achieving a double-digit return on tangible equity, as we have done in the first quarter, with 11%, clearly targeting an ROTE of 15%, which means we earn our cost of capital. There is a question whether any deal is necessary because shareholders have a very good deal with us and our standalone strategy, that's for sure.
OK, Bettina Orlopp, always appreciate your time. The CEO of Commerzbank on the back of those beats when it comes to the earnings for that bank, with a beat in net income, net interest income as well, and loan loss provisions coming in lower than the estimates. Bettina, thank you for your time. Bloomberg, meanwhile, has learned that UBS, sticking on the banking space, UBS is in talks to sell its hedge fund unit, O'Connor, to Cantor Fitzgerald. If it goes ahead, the move would end a more than 3-decade run of ownership by the Swiss bank. We understand the deal could involve a possible revenue-sharing agreement. And Pope Leo XIV will hold his first Mass this morning at the Sistine Chapel, less than 24 hours after being elected. The Pope, previously known as Cardinal Robert Prevost, is the first North American to lead the Catholic Church. For more, let's bring in Bloomberg's Italy Bureau Chief, Chiara Albanese, in Rome. Chiara, what can we expect then from Pope Leo in this Mass today? Pretty remarkable scenes yesterday.
Absolutely. So it was a surprise decision, and it is also, and it was a powerful decision. That means the Pope that has been chosen, a US citizen, is a man that will impact geopolitics in the world. In his first words, he mentioned several times the world peace, so he will play a role also on the geopolitical side.
In terms of that bridging role that some have suggested he may play in terms of healing the divisions within this Catholic Church, how central will that be? And how should we understand the potential relationship? President Trump has come out and hailed this decision, but there are potentially some friction points, particularly when it comes to the question of immigration, when it comes to the Trump administration and this Catholic Church.
Yeah, this is a great question, and especially the role with with the US President Trump and how he will fold into the conversation. So the new Pope definitely will not be a shy one. He is one that uses social media quite a bit, like the US President, and they will likely clash on some topics like immigration. But also, he has shown to already say and speak his mind very loudly in the past. He said publicly that Vice President Vance was wrong about his assessment of the Catholic love. So we should expect that bridges will be built on some issues, but also bridges will be tested on some others.
OK, bridges built and bridges tested. Live pictures there of the Vatican. Another moment and chapter in history, of course, for the Roman Catholic Church. Bloomberg's Chiara Albanese in Rome. Thank you. There's plenty more coming up. Stay with us. This is Bloomberg. Happy Friday. So the trade tailwinds are certainly there after you got the framework deal between the US and the UK. We look ahead, of course, to arguably much more inconsequential conversations in Switzerland this weekend between the US and China. That is what is material for this global economy. And expectations, maybe you see a pretty dramatic reduction in tariffs. That is all feeding into the upside that's coming through for US stocks. 2 straight days of gains. You've had 2 weeks of gains. This week, though, you'd have to punch through a very decent session today to get a 3rd straight week of gains. As things stand, you're still set for a week of losses overall for US stocks, but it's coming on the back of 2 weeks of gains. We'll see again if the trade story elevates the session enough to drive through and end up in positive territory for the US session. But certainly the catalysts seem to be there for now. Let's flip the board and have a look in terms of how the tariff story has evolved. And this is the reporting, of course, from Bloomberg, that the Trump administration is pretty keen on reducing these tariffs. It's currently at 145%, of course, on Chinese exports to that nation, the equivalent 125% imposed by China on US goods into that market. And there is an expectation that there's going to be a drive from the Trump administration to cut those pretty dramatically. But even if you get back to 50%, for example, the kind of April the 2nd numbers, that's still pretty significant in terms of decoupling the trade between the two nations. So will it be enough? Will the markets be able to ride that one out and hope that there is going to be more detail and more progress in the weeks and months ahead? But that is the scope and scale of the tariffs as things stand, and where, of course, both sides want to see those reduced. The Chinese side continues to come out and say that they need a complete reduction of those tariffs to really move forward on these trade talks. Let's have a quick look at Bitcoin, because this ties into the trade conversation, at least the risk-on sentiment that we're seeing at the moment. You're having the Bitcoin, of course, largest by market cap in terms of cryptocurrencies, breaking back through 100,000, currently at around 102,000, just shy of 103,000, just as that gauge of risk-on sentiment that is being felt in the crypto space. Now, with central banks in focus this week, we have live coverage of the Reykjavik Economic Conference. Don't miss a new edition of the Bloomberg Weekend. There's some of the names, by the way, that we'll be speaking to, just for note. So put those on the diary. Tune in for some of those conversations as well. That is one to stay tuned for. Don't miss a new edition as well of the Bloomberg Weekend newsletter. We can get deeper analysis, feature pieces, profiles that provide unique insight into the latest news from around the world. The opening trade, though, is up next. This is Bloomberg.